What exactly is the market and investors pricing in terms of scrutiny from an antitrust perspective on Facebook, Mark?
Okay. I was actually surprised by the results of your panel. I would think that of those companies, Google is probably the company that faces the most antitrust competition examination risk. I think Facebook's issues are actually different. I think they have to do a lot more with privacy, data privacy concerns. They have a somewhat checkered history when it comes to that. So anyway, what's happened, though, is that there's three big risks when we think about big tech. It's maturity, competition, and regulation. Regulation has become bigger as a risk each of the last 3 years. And I think what's happened is investors have taken down their target multiples by a turn or two. Prior to all of this breaking out, Cambridge Analytica, et cetera, you had Facebook getting along at around 25 times earnings. I think the market is saying we're not going to put that on because we just don't know what the existential breakup potential risk is. So we're going to take it up to 22, 23 times earnings. I think that's really what's happened to the stocks, that this regulatory risk has kind of trimmed the multiples, at least for the foreseeable future, that investors are willing to pay for these assets.
But if Facebook is selling off today because of fears of an antitrust investigation, do you think that's overdone?
Yeah, I'm going to go out on record on this. I do think it's overdone. I'm going to make 2 points. One is that I think breakup risk is actually very small based on the legal experts that we've talked with. I think that Facebook would actually be forced to divest an Instagram or a WhatsApp, acquisitions that have been cleared in the past. I think there are very few precedents that would make that a probability. I think that's a really small outcome. And then the second thing is, as investors, what impact is this regulation and these examinations having on the company's fundamentals? Look, we've had a chance to test this. We've had a year and a half to watch the biggest privacy regulation across the globe impact these fundamentals. That's GDPR out of Europe. It's been applied pretty much globally. And it has not had an impact on advertiser demand for Facebook, Instagram, Google, nor on user demand. You've seen extremely consistent growth rates out of Facebook and out of Google over the last year and a half. Facebook's growth rate is decelerated by about a point a quarter. They're still growing twice as fast as internet advertising. So I have not yet seen regulation impact the fundamentals of these names, at least in terms of demand on the top side. I don't think it will now. So when you see these kind of trade-offs, I think it's a buying opportunity. I realize this overhang related to regulation may be there for a while, though.
So, Mark, it's Stephanie Link. How are you?
Is in Australia with a big delay.
There you go. Okay, I hope you're doing well.
Hey, Stephanie.
So I have a question. When do you think fundamentals are going to matter? I mean, I think that these stocks are going to have a struggle in outperforming if you have these headlines in the news every single solitary day. It's almost like Boeing, which you don't cover, but it's the same thing. So when do you think we're going to be able to put this aside and really focus on double-digit growth, operating margin expansion, operating leverage, and that sort of thing?
Yeah, I think, Stephanie, you would know the answer to that question just as well as I would, or even better. My guess is that this is going to take some time. These are uncharted waters, but you'll have these kind of dip and rallies in the stocks, and you're going to have prints, EPS prints, where the companies show that fundamentals aren't impacted, that growth rates can sustain. Google is going to go 39 quarters of 20% plus ad revenue growth. That's what they've done up through this last quarter. March quarter was a little bit of a surprise, and Facebook's going to have to show that it can kind of keep sustaining 30% growth. I think when investors see that there isn't that a breakup is probably not going to happen, it's a really distinct slow probability, and that fundamental trends aren't impacted, I think investors will wade back into these stocks. I mean, step back. These companies are trading at 19 and 20 times. That's not times sales. That's times earnings. That's Facebook and Google. And Facebook, you can buy at a discount to its growth rate. When the market wants to get back a little bit more risk on, growth on, I think Facebook is one of the best assets that the market's going to return to.